More headwinds for Boeing. Let's talk to Reuters correspondent Ernie Scheider. All right, Ernie, other countries here following suit with the FAA saying these 787 planes need to be grounded. Ethiopian Airways, the latest.
Yes, and the countries keep on stacking up. Poland's state-owned airline is even going to try to get money back from Boeing because, you know, these 787s are kind of expensive, $207 million just for one. And if they're catching on fire, airlines aren't happy with them.
Exactly right. Statement out of LOT saying all elements and irregularities that generate cost mean that we will be filing for compensation in due time. They're still making these planes, though. They haven't stopped production.
Yeah, I mean, there's several on the tarmac in Washington State near Boeing's big production facility waiting to be delivered. So, you know, I think a lot of people are still optimistic that they can fix this, but in the interim, it's costing airlines. You know, Japan's ANA airline, it's costing them probably about $1.1 million just every single day that they have a delay on this right now. Customers, though, are willing to give them the benefit of the doubt, it seems, and I think that's why you don't see a huge precipitous drop in Boeing stock. You know, we quoted, when I went over our stories today, a salesman who just got off the last 787 flight in the U.S., and he was saying, he goes, this was the most relaxing flights I'd ever have. I hope they sort it out. It's one hell of a plane. So I think, you know, customers sort of like, you know, the new carbon fiber, the new other designs, but they don't want the planes catching on fire.
Yeah, different story for some of those who had to come slide out of that chute off the side
a small difference. Yeah, indeed.
Small difference there. But Boeing actually took back the lead as the world's largest maker of commercial jet planes in 2012 from Airbus.
Yeah, I mean, they're always neck and neck, and they're going to be going at each other, you know, for a long time to come. And competition is a good thing as well. And, you know, Boeing does a lot more than just the 787, so, you know, it's not going anywhere, but this is their big headache right now. All
right, let's talk a little e-commerce, shall we? First with eBay, topped holiday forecast. Mobile devices, folks are buying everything on their mobile stuff. Their marketplace is up. PayPal transactions are up over there. Good news.
Yes, very good news, because people, when they go to brick and mortar stores, they can search on their mobile phones and try to find something cheaper. So that really helps eBay. Also looking out to 2013 and 2014 is their big expansion plan for BRIC countries, Brazil, Russia, India, and China. They want to open up a new e-commerce site in Russia. You know, they're very big in other emerging markets as well. So firing on all cylinders after a few years, you know, during the recession where people were wondering, can eBay still matter?
Yeah. Speaking of bricks and mortar stores, though, when you shift to Amazon, other bricks and mortar places that have online places like Best Buy, they've had to pay the state sales tax. Amazon hasn't. But now, with their earnings coming up over the holiday season, 3 big states, including California, Texas, since back in July, they've had to pay the sales tax, and this could affect earnings potentially.
Yeah, if you, a lot of analysts are saying if you look at sales just before the fourth quarter started and during the fourth quarter, that there's a big difference, especially in states like California. So we'll find out on January 29th when Amazon reports. But definitely it's going to take a hit to their earnings, because if customers are able to buy tax-free shopping, they want that. But if they don't, if they have to pay tax, there's going to be a big difference there. So in terms of consumer appetite, so what will that mean? We don't know. I mean, not all 50 states are charging Amazon with the task of collecting this sales tax. So we'll see.
But Best Buy among some of the beneficiaries there, because they actually saw a little bit of a bump in those states.
Well, I mean, Best Buy can use all the help it can get right now. So
True. All right, Ernie Scheider, thank you so much. I'm going to move now to the hot spot, where I'm going to be joined by Anthony Curry, Reuters Breaking View columnist. All right, let's talk some banks. A couple of banks here. B of A, Citi, earnings out. Looks a little bit ugly. We've got some messy charges all around, huh?
Yeah, I mean, these are two banks which were probably the best performers last year on the stock, at least. Citi was up 50%. B of A's stock doubled from very low levels, don't forget. And they come out today and you look at the earnings, you think, why am I going to, I'm not going to see any more of this kind of growth in their stock again. Now, I think B of A is the worst one of the two by a bit of a margin. They've got a lot of charges in there, about $5.5 billion of charges. They've got $2 billion of incremental stuff they put in that looks good, a lot of that being tax benefits. So if you strip all of that out, they made a return on equity in the quarter of about 4%. And that general rule of thumb is if you're not getting 10%, you're not beating your cost of capital. Citi's looking better. Again, they've got loads of mortgage litigation charges as well. Not as many as B of A. We've got some litigation charges. They've this repositioning that new CEO Mike Corbett announced last quarter. Well, one could argue that Mike O'Neill, the chairman who kicked out the previous CEO, is running a bank, but let's just pretend it's Mike Corbett.
So let's pretend.
Again, well, of course it isn't. But strip all of that out, and they're making about 6.5% return on equity. So they're looking better, but it's still pretty dismal.
All right, both of them down about 3% or so today. Morgan Stanley last the big banks to report tomorrow. Give us a quick preview.
Well, I think the thing to look out for there is compensation, compensation, compensation.
Right.
If you look at the other banks that were reported before today, they've each had their own little takes on what to do about compensation. Goldman especially slashed its fourth quarter compensation, so it managed to breach that 10% return on equity hurdle as a result.
Sure.
Morgan Stanley, along with Citi and B of A, is trading much worse than the others. It can't get a very good return on equity. They're talking about deferring pay, which is great if you have the revenue to pay for it in the future.
Yeah.
Otherwise, as CFO, the new CFO at Goldman said yesterday, all you're doing is mortgaging your future. Right. So they've got to say, okay, we can do this. It can be helpful, but on the other hand, if they don't cut their costs, it ain't going to look good either.
All right, ain't going to look good. Anthony Curry, thank you so much for Reuters Breaking Views. And I'm going to head back to the Market Monitor, where I'm joined by his companion over at Breaking Views, Mr. Rob Searan, and we're going to talk about Apple. Story out of the Wall Street Journal today, saying that perhaps Apple is in growth purgatory, as one analyst put it. Tease that out for us. That doesn't sound good.
Well, it doesn't sound good because it's not. What it means is that basically investors, when they buy a tech company, they want to buy growth. You know, like Amazon, people pay over 100 times earnings. What that means is it takes 100 years of earnings to get back your investment. Apple, they only pay 10 times. Normally what happens when you get compression like that, when it's called growth purgatories, investors start leaving and the multiple goes down. So it goes from like 100 to 50 to 20 to the market. Apple's still growing, so why is it doing this? No one really knows, but everyone suspects because it's so big, investors think it can't possibly grow anymore. Right. And we'll see in the when they put results out next week.
Earnings coming up soon. That's right, next week. All right, let's move on and talk Herbalife. Fourth quarter earnings above analyst estimates. Stock's down 1.5% today, though.
Yeah. That's mainly because they said costs were a little higher. But the main thing is not really Herbalife. So that's kind of like a sideshow. What it is actually the hedge fund managers getting out there, and everyone. Ackman is
Bill Ackman.
Bill Ackman, sorry, is the biggest. He's got a very, very large short position. And what that means is that if enough investors get in there, you can squeeze him out, and he'll have to cover somehow. Right. There's an old couple that says, he who sells which isn't his and has to buy or go to prison." What that means is he's going to have to go out there, and if enough people go in there and force him, they'll eventually force him to buy back the stock at a very high price. And that helps everyone, all the other investors.
All right, Rob Searan, thank you so much. That does it for us. Remember, folks, follow us on Twitter at Reuters Insider. Check out our YouTube channel at Reuters.com/ReutersTV. I'm Lisa Bernhard. This is Reuters.